Good evening, all. Ira Epstein of Linn Associates with your financial market wrap-up. And this wrap-up is for Tuesday, and this is the 1st of December, 2020. It's cold in Chicago, in the 20s, not snow. It doesn't feel like a bad winter, I must say that, but it is on the cold side. So today we saw Treasury Secretary Mnuchin and Fed Chair Powell in front of the Senate, a committee. Tomorrow morning they do it again. Obviously, if you looked at it and you want to highlight, give the market money. That is the highlight of what they said. Small businesses need help. Can they repay the money? No, it should be not a loan. It should be in the form of a grant. I'm just giving you, think of the echoes in the chamber, because if you watched it and you keep watching it, that's the story you walked away with. Will they get it? Who knows? There's a $908 billion bipartisan plan that is floating out there. I don't know where it went. We'll find out as the days go on. We know that the Congress is going to break for their Christmas break sooner rather than later. They have a heck of a lot to get done. Can they get a relief bill done? Can they get the budget going, or is the government going to shut down again? Defense spending is going to be a big argument. I can go on and on where all the arguments are. On the energy market, I've not heard anything on OPEC in the news. So they are still having a fight. The numbers from today, the API, were terrible. We saw a net build of nearly 8 million barrels. That is ugly, ugly, ugly. So we're still getting that point where too much product out there, the COVID impact. You're going to get these type of numbers. I think you're actually going to get some ugly numbers between now and the end of January. And I would expect that. You're going to tell me, nah, it's Christmas, we're going to have great sales. I'm not arguing that, but those are goods already built and being sold. Where are we going to see other numbers? Well, people aren't working. People are going to run out of money. The moratorium on evictions is running out. There's a lot. Can Congress get the job done? We're about to find out. We had a big rally in silver. Copper market got over the 350 level. Interest rates, wow, you went back up sharply in interest rates today because the market is looking at the potential of getting a relief bill and what that might mean. So as we look at the S&P on a weekly basis, we're up 20 handles, 20.75. A handle's a full point. That's how you do it in the pit. 21 now, 0.58%. It's your 18-week moving average. The market is over it. As you take a look at the chart action here, you haven't given up anything. This chart action is still holding on. But what is the pattern? Well, I have trouble with it. And I can say that I got a higher high, but remember this downside we had here? This outside day down? That took out that other low. When that happens, I don't have a clear picture. And when I don't have a clear picture, I don't try to make a clear picture out of one that isn't there. I just accept the fact that I don't have a trend up or down. I certainly have upside bias. Market is, I think you'd agree, staying over the 18-day moving average of closes, which is over the green and the 200. So everything's still lined up. Where's the resistance in the market? Well, it's the Bollinger Band. What number did you go to finally? This is yesterday. Outside day down. If you take out the high of an outside day down, my rule is that you're going most likely to make a run to the closest what? Moving average above the market, well, the key moving averages are below it, or the Bollinger Band. This is today's action Tuesday, and this is what you're doing as you're backing away from it. So I got pretty much what I was looking for in the marketplace. Now the question is, what does it want to do? Well, with that, I'm going to go look at see this number. What's the slow stochastic doing? You can't count what it's doing right now because you don't know where the settlement's going to be for Wednesday. So I'll take Wednesday off the board because we already know Tuesday. Both numbers were over 80, but not the day before or the day before. So all you can do is stay overbought. So my viewpoint on it, an overbought market that's not got a trend that I can play with on the swing line. The bias is up and it's hit an upside target, the upper Bollinger Band. The NASDAQ hit that band now 3 times in a row. It is overbought as well. My rule of thumb is no, I don't tell my clientele to buy overbought markets. Is there anything bearish on the market other than it being overbought? No, an overbought is no reason to be bearish, because an overbought situation can resolve to being embedded. Overbought is just that. It's a filter that says, okay, if you're not in the market, you missed it, move on to something else. In the Dow, you have lost your embedded reading and it cannot come back now. Now, this is what the market looked like yesterday. This is Monday. You had lost the reading, not on Friday, but yesterday. If you don't get it back today, which you did not, even with a higher close, the odds are very strong the price is going to make a run at the 18-day average of closes. Does it have to? It does not. Does it often do it? I believe it does. You can go do your own work on the chart and tell me what you came up with. But that's what I am expecting. Am I bearish? No. But I have an overbought situation that has to go through the whole process if it's going to embed again. Takes 3 days over the 80 reading for both numbers. It's not doing that. Or they both fall, which is more likely, and get under the 70 level and they get back into neutral territory. That's what I'm expecting. As for the Russell's hanging in there. It's trying not to lose its embedded reading. But if this market were to close, say, 15, 20 lower, it probably loses it. So you're at a danger point in the market. Another point that you have to watch, of course, is you had this a pattern now of lower highs, lower lows. This rules the day, not this. Until that's lost, you're long. I think the pros, though, are lightening up on those long positions. I don't think they want to be bearish. I think they want to be bullish. Question is, can the market arc it around and just flatten that out? That'll be the interesting part. In the VIX, we have an embedded reading. So I think the pros sold up here, and I wouldn't be surprised if they're taking some money off the table against this. Why not the Bollinger Band? You haven't hit it very often. It's rare. And as you're going deeper down, it's harder to get to it. Now, if you get to that number, the Bollinger Band, I am expecting, and this is another reason that I'm questioning the stock market rally. If it were to drop to the lower number, I think the pros will start writing puts in the hope the market gets back to the 18-day average and grab that premium. Which one? Well, ask your broker or deal with our brokers. In the T-bond market, momentum down, trend down, bias down. This market went to a state of collapse today. It came in with higher lows, higher highs. If you got through this number, watch out. And that's what you did. Now the question is, how deep? Is it going to go back into these lows where it was back here? Right now, the bears have control. Resistance, as I see, it's 173.20. It's a lot of risk on it, though, because where would you put a stop over the most recent high at 175.11? That's almost, it's about $1,700 a contract, way beyond my tolerance level. I've got the same problem in the notes. Lower highs, lower lows, downtrend, bias down, objective back to those same lows. To go short here at 137.24, more palatable because the risk is to 138.9, not as much risk. You're in the neighborhood of 16 to 17 points, about a $600 risk there in dollars. Doesn't mean you have to follow my stops, by the way. That's my viewpoints with the swing line. The dollar index, you're under the lower Bollinger Band. You only stay under that band 5% of the time. Am I bearish the dollar? I have been bearish the dollar since here, and I've been telling you since the beginning of November. And for those of you that subscribe to my research, you know the plays we've made against the dollar. So I am, but I also pay attention to my work. That doesn't mean you can't go lower. There's nothing here that I'm bullish on. I just wanted to move to the right-hand side again. That's all that I'm looking for there. In the euro, you're now over the upper Bollinger Band, 2 days embedded reading. I'm bullish, but 5% of the time you stay over it, I'll let somebody else want to carry that. I'm looking for it to pull back. In the end, the 18-day average has suddenly taken on a lot of importance in this market. The trend, the swing line trend is down, the bias is up, and momentum is flat. Nothing really showing itself there. For my money in Bitcoin, I think the pros are out. I think you got to that band and they're just looking at it. You're overbought. You lost an embedded reading right through here, as you can see, right there. you went at the same time right to the 18-day average. I call that the line in the sand. Came back for a new high. This is pretty wild action and swinging like mad all over the place. It's not as wild as silver was today. You realize people get nervous about Bitcoin right now, but understand silver moved in dollar terms. $1.50 an ounce, $7,500 on a big contract. This market moved big this week, $2,000 in a day. I am not a fan of people trading this. Don't get me wrong. I don't think the volume or open interest is there, but cryptocurrencies have such a following that I do that. I still don't believe that Bitcoin is going to become a tender of value. I think it is a storage of value, a very big difference between the two, and I do believe digital currencies are literally right behind me. They're coming, and they're coming fast. They won't be the type the government can't track. That I don't buy. Brent versus WTI crude, you can see the differential yesterday. You come down, now you're going back up. Why? Well, our WTI numbers. What happened today in our oil is we put in on the API number. Tomorrow we get the EIA number at 9:30 in the morning. The API number, whoppingly bearish, nearly an 8 million net build. That's huge. You can see that the market's working its way lower. It has lost its embedded reading. It lost it not today, tonight. It lost it. And if it stays lost, the odds favor prices are going to make a run here. I'm going to repeat. I don't know how to play this OPEC game. I don't want to play the OPEC game. It gets even worse. And that's because even if you told me what's going to happen, I don't know how the market would react to it. The problem is, what if they reach no deal? No deal, and the Saudis decide, hey, I'm going to punish you again because you're not going to cut your production. Well, we saw crude oil prices go, back here to a negative price. That's my point. So I think that the market's selling off with fear. Same in this market. You lost your embedded reading. I think you could get back to these 18-day average of closes. And you're fighting a big battle now at the 18-day average in nat gas. Winter is here. Now the question is, does it find a base to try to make itself work higher? If it does, big resistance up at this point. The key is to get through this. I keep saying up through instead of down because I think that, as you get into colder weather, the demand will be there. If there's too much supply, it'll overwhelm the demand. So it's tricky, but the market recognizes that right here. I talk about a lot of this. But, with our futures trading kit, if you get hold of my staff with it, we can set you up on all our market reports so that you get to see what our staff writes. In the kit, you get everything you're going to see in this index, along with access to our charting software. Now, we have to give you a user ID and a password for that, and then we want to turn on the quotes for you because the exchange, to give them through that, the exchanges say they want your name, number, and we got to get all that info in order to give it. And you do get a free trial of it if you've not tried it from us before. 14 typical chart patterns, all the different brochures that we have and we regularly put out, along with access, a direct link right to the CME group where all their new brochures are always being put out. So it's a lot of information. The cause and effect sheet has to do with something I created many, many years ago when Paul Volcker was around, because it told me how to start playing that crazy instrument called T-bills. That was the first one that came on, and then I watched as it blew up into the bonds and other markets, and I learned from it, and I learned what money velocity is. If money goes supply up, down, what does that mean? There's new terms. They're all in play right now. And you read about them in the news on a regular basis. How do you get all this? And it's a wealth of information, and it's free. Just either call my staff, that's the ideal way, or go to our website, www.iraepstein.com. You'll see the free offerings. If you want to find out about my subscriber videos, which are a must in my opinion, go when you're on the website to research, and you can take a look as well at the education part for my charting software. On my charting software package, I'm going to be bringing up a special for traders. So something you might want to look at for a one-year subscription to my services for those of you that aren't already a subscriber, or for those of you that go month to month and maybe want to increase to that 1 year. I'm Ira Epstein. You have a good day.